Hello everyone, welcome to my video lecture. In this video, I am going to explain the basic schemes of GST. We know that GST is an indirect tax levied by the central government on all supplies. Now, the question is whether all dealers should compulsorily pay GST, whether registration under GST law is mandatory to all the dealers. The question, if it is so, the answer is it depends upon the aggregate turnover of the dealer or the SSC. That means a dealer can opt for two types of registration, any one of two types of registration. What are the two types of schemes available? One is the regular scheme, another one is composition scheme. Now, what is regular scheme? A dealer whose turnover, annual turnover, aggregate turnover exceeds a specified limit, threshold limit, he should compulsorily register under GST Act, under CGST Act 2017. And Section 22 of CGST Act 2017 prescribes the threshold limit for registration. That means, in case of supply of goods all over India except specific category states. Specific category state means usually northeastern states. Except in those states, in all other states all over India, if the turnover of a particular trader or the dealer exceeds rupees 40 lakhs in a year, the annual aggregate turnover of a particular dealer exceeds rupees 40 lakhs in a year in any state, it may be in Karnataka, Maharashtra, wherever it is, except in special category states. Special category states means northeastern states. Okay, in all other states, if the turnover exceeds 40 lakhs, then he should compulsorily register under GST and he should opt for regular scheme. He can opt for regular scheme. The second one is that what about the supply of goods in northeastern states? In special category states, the limit is fixed to 20 lakhs. Okay, and in case of supply of services, in all states except northeastern states, the limit is 20 lakhs, whereas in special category states it is 10 lakhs. Let me summarize. If a dealer is dealing with supply of goods and services, then he should register under GST only if his aggregate turnover in a year exceeds specified threshold limit. Okay, the limit is for goods, it is 40 lakhs and 20 lakhs. 20 lakhs in northeastern states and 40 lakhs in all other states except northeastern states, special category states, right? And in case of supply of services, in northeastern states, the limit is 10 lakhs, whereas in other states of the country, the limit prescribed is 20 lakhs, right? Now, if the aggregate turnover of particular dealer exceeds this specific limit, he should compulsorily undergo for what? Registration. Now, he has one more option, that is composition scheme. What is composition scheme? The second scheme, composition scheme is if the turnover of a dealer is below 1.5 crore in a year. If the aggregate turnover of a dealer is below 1.5 crore in a year, he can opt for composition scheme. That means this scheme is specified to small and medium dealers. So, what is the benefit of this dealer? Okay, and in case of northeastern state, the limit for composition scheme is 75 lakhs. That means here composition scheme is a simple and easy scheme under GST for taxpayers and it is meant for small dealers. Now tell me what might be the benefits available of this GST composition scheme. Here, in case if a person is registered under composition scheme, he is considered as a small dealer. in such cases, he need not follow all the tedious formalities of GST like filing of returns or issue of tax invoices, etc. Instead, along with that, he need not collect GST also from his customers, right? Instead, he issues bill of supply to customers and he need not issue any tax invoices to the customers. Therefore, let me give an example to understand this both basic scheme and basic scheme of GST, that is, one is regular scheme, another one is composition scheme. Suppose Mr. X is a dealer in Karnataka. Mr. X is a dealer in Karnataka and his turnover in the last year is 80 lakhs. His turnover in the last year is rupees 80 lakhs and he is engaged in supply of goods. Now, Karnataka is not special category states. So, it is considered as other states. In other states, the limit prescribed for registration is 40 lakhs. So, here, since the turnover of Mr. X is above 40 lakhs, the limit is 40 lakhs. Now, I told the example of 80 lakhs, then he should compulsorily undergo for registration. Now, he has two choices. One is regular scheme, another one is composition scheme. Composition scheme is available only for a dealer whose turnover is below 1.5 crore. And here, since his turnover is 80 lakhs, he can go for composition scheme or he can go for regular scheme. Remember, undergoing composition scheme is not compulsory. It is left to the discretion of the dealer. If he finds that it is convenient and comfortable for him, he can undergo for composition scheme or he can opt for regular scheme. But remember, once the turnover of a dealer exceeds 1.5 crore, assume that a dealer's turnover in a year is 2 crore. Last year, then he don't have the choice of composition scheme. He should compulsorily go for regular scheme. So, compared to regular scheme and composition scheme is easy to adapt. There is no strict and tedious formalities to be followed. The dealer who is registered under composition scheme need not issue tax invoices and he need not maintain all those required records. But if he is registered under regular scheme, he should maintain and he should follow all the rules and regulations and he should compulsorily collect GST and he has to file periodical returns to the department. I hope this video is clearly understood. Thank you very much.